Welcome back to another edition of Diamond's Edge. My name is Greg Diamond, editor of 10 Stock Trader at Stansberry Research. And this week, we're going to look at two sectors that I would be very cautious about buying. In fact, I'm going to be looking to sell them quite aggressively. And I'll show you why. Let's jump into it. Okay, the first sector I want to cover is financials. Okay, and here's a chart of the financials. And as you can see from the low back in October of 2023, we have this nice uptrend. But as you can see here at the blue lines, we have support, we have resistance, and it's really kind of followed a nice traditional or textbook rather Elliott wave pattern. And as you can see here, it's starting to get exhausted. It's starting to get long in the tooth, so to speak. And what we have is, a very short-term Elliott wave count, but you see all these fives up here. That's pretty much telling me that this is topping out. If you've been following me, whether it's 10 Stock Trader or on the videos in Diamond's Edge, I've covered the price divergence. I've covered the negative divergence on almost every stock we've covered, every index, every sector, and financials are no different. Okay, so here in XLF, you can see here on the RSI, this is starting to trend down with new prices, new highs in price, and then the same thing on the composite index. So again, I'm just seeing this everywhere in every sector, in every, almost every stock. So again, it's telling me that we need to be cautious about getting aggressive buying here. So, as you can see here with this red line, maybe we get a drop, get another bounce into the end of this week. But, if we get what's called a throw over here, and I can show you what that looks like, maybe it trades right above, really traps bulls into this, into one more new high. And then you have this throw over where it throws over the top and actually breaks down through support. Okay, now also within financials, we can't just look at one sector and think, or one chart and think we have it all figured out. All right. So here's a spread chart or ratio chart between XLF and KRE, KRE being the regional banks. And, if earlier this year, New York Community Bank kind of hit the headlines that, they had all these write-downs from bad loans and the stock cratered. They had the Hall trading, the whole thing. Now that was this big drop here, but take that aside, look at what's happening here even before that happened. Okay. Look at what happened here in, back in December. KRE made a high with XLF. And XLF kept going, but KRE didn't. I mean, yeah. So, you can contribute the big drop to just one bank, but it still hasn't recovered. Now you can see the correlation here going all the way back, really. I mean, when these things correlate together, yeah, that's a sign of a strong move. They bottomed here in April, May. They rallied together. They topped in last summer and dropped together, and then they were rallying together, and now they're diverging. Okay, that is not a sign of a healthy market. It's not a sign of a runaway bull market. So I'd be very cautious about, going long here. And look, if this started to catch up, if I start KRE starting to break out with LX, I'd probably change my tune. I'd probably go long, but we're not. So that tells me, price divergence, negative divergence that we're seeing individually, that, this is a big problem for banks. So keep an eye on banks over the next couple of weeks. I think we're going to see some fireworks there. Okay. Now let's get to what I covered last week, and that is semiconductors. All right. So what we had, let me get out of this and do this one. What we had last week was NVIDIA. It had a nice move after earnings. And if you saw my video last week, I said, yeah, NVIDIA can probably pop higher here. And that's what we saw. But once again, what are we looking at down here? Okay. On this new, high, and maybe it can continue higher over this week. That's fine. But look what we have below. Look at this divergence on the RSI. Look at this divergence on the composite index. That is not a good sign, that this thing is just going to keep drifting higher. So, I mentioned what a possible scenario that we could have, and this looks to be playing out, is, a high this week, or maybe it was made last week. Let's say it just goes like this, and then, we can get a nasty correction here. Again, with a low, maybe somewhere in late March, and then we can get another rally that we can trade. And again, I would buy this if this is the scenario that plays out, but also understand, let's say from this high, at a minimum, you could be looking at a 20% correction. Or let's say, it fills the gap, so to speak, okay? And filling the gap is this gap from after earnings or the day before earnings and then after, okay? That's at least, let's say it's from the high last week, that's a 15% correction. You want to, that's a lot of volatility to trade. Okay, so be aware of what's happening with NVIDIA. Again, this is not something that I would be chasing right here. Even if it, trickles to make a new high, there's just way too much divergence. All right, now I'm going to show you something that I think you'll really like, and this is more long-term. This is a chart of the Philex Semiconductor Index, the SOX, and it tracks SMH, the popular ETF that a lot of people like to trade, that I like to trade myself. Okay, and what we have on this chart, these blue lines are what's known as 45-degree angles. They are Gann single-degree lines that the line represents 1 unit of price for 1 unit of time. So it's not like I'm drawing a trend line. Now, most people, when they draw trend lines, they can do something like this. Like you start here, and then you can kind of manipulate it the way you want. You see this green line down here, how I'm kind of manipulating it? Yeah, there's nothing wrong with that. You can connect the lows, you can connect the highs, you find support resistance. That's great. But with these 45-degree lines, and you can see this 45 here, I can't manipulate it. Okay, you can see what I'm doing here. I can move it. I can move it from where I want to start. And I'll do that here. Here we go. I can do that here, but I can't connect it to where I want. So what do? So I start from a major low, and I see what happens over time. Now, this is a monthly chart, so it's not like we're going to get these signals all the time, but from major, this is what Gann did, WD Gann did, okay? From major lows and major highs, okay, but I'm just showing you from the lows right now. He would track these over time. Now, look what happened. This is from the low, these were from the lows back in 1996, where, we had the dot-com rally, bubble, burst, whatever you want to call it, and look what happened, okay? Into this 2000 and top, from this low, it marked the exact high, and then from this low, it marked the high here, and then it caught the secondary high, and then obviously you know what happened, okay? So if that's the case, I want to know what happens now, all right? Let's fast forward to what we have. So this green line is another 45-degree angle. This is from the low way back in 2009 after the great financial crisis. Now look what we have, okay? This is back in 2021, 2022. It marked the high. This was one of the reasons why I started, calling for a crash. This is one of the reasons why I traded from the short side for most of the year. We had an 83% win rate, which is really good. This very simple but effective Gann strategy helped me make that call for the top, amongst other things. And you've heard me say before, you can never use anything in isolation. You can't just use one method or one technical indicator. You have to use multiple different things. But you can see how this just nailed the top almost to perfection. All right. Well, look what happened as of last week. Okay. You can see. I'll zoom in for you. I mean, this is the 45-degree angle going all the way back to that low back in 2009. And then here we have it again. Right. It's, again, maybe, again, this is the monthly chart. Maybe it just ticks higher, but you can see, this was the close last week. This was the high, and this is a monthly chart. So again, it could rally into the end of the week, but again, still, you're ramming up against this long-term resistance that has called some major highs over the last 20-ish years. So that's not something I'm going to fade. And then given what we've seen in NVIDIA, that's something that I would rather sell rather than buy, at least at this point right now. So you can also see here, I'm looking out into the future. I'm doing what WD Gann told me to do. And I'm looking from, this is the 2020 low. This is the 2018 low. This is a low in 2022. So I'm looking for support out in the future. But again, this is a very, very long-term chart. This is a monthly chart going for years. Now, when this comes back down, guess what? I'll be changing my tune. I'll probably be buying if we hit those support levels. I'm not saying that we're going to see another crash, but right here, this is at least telling me this is a great spot for a short-term volatility trading opportunity. All right, so keep an eye on financials. Keep an eye on semiconductors over the next week or two. I'm going to be making trades around these recommendations. Thanks for listening, and we'll see you next week. Thank you.